Good morning and welcome to the early bird. And here we're looking at the Dow Jones on a daily chart, and I haven't updated the data for this yet, but the price bar would be in here to 220. And the reason I'm showing you this for is because there is one bearish count that that needs to unwind so we can eliminate it, and essentially the price would need to come above this situation here, which is around the 12.3 mark here, but also the 1283 as well. So it's still we still have to include this bearish count. Now it does appear that we've got 5 waves up here. Now, in having 5 waves up in that direction there, that would normally indicate that we would be having in either way, we would, for either counts, bullish or bearish in this bigger picture here, we would, if we've got 5 waves there, would be looking at a 3-wave counter trend from there, and then would be looking for another 5 up. Now, so this move down through here, if this is still wave 1 down from this point here, then this would be the A, the B, and the C, and then would move down from there. It's a little bit sort of unlikely. It's tending to look to the bullish scenario, but we still won't be able to eliminate this particular count unless we get a move through the 12.3, say, or the 12.83. So I was expecting this week ahead to have this type of correction to come into play. On Monday there might be a bit of follow through, so we may see the market edge a little higher like this. But even so, on the Monday, Tuesday, Wednesday, we should start seeing something like this here. Now, we won't know if this is going to be this correction here is going to be a bearish count, and we'll start looking like this here. So this 3 waves that we're looking at actually turns into 5 waves. So this will present a critical scenario here at around the 12,000 mark here to be a bearish case or a corrective bullish case. So either way, we will be trading long or short from this here. So we can have our opinions, but at the end of the day, once this unfolds to a certain point that we know that we've got 5 waves down, or we're going to get 3 waves down, and then we get 5 up through there. So it's going to be a tricky area here next week here, just to sort of make things even more difficult, but that's kind of what we're looking at. So we're expecting, markets normally work in sort of 9-day cycles if they're sort of on the run. So this has sort of moved up for 6 or 7 days here. So we've still got a bit more in here and reaching supply there. And if we drill down into that scenario there into an intraday chart, we've got the 30 minutes here. So we're looking for 5 waves up. It's a little bit rough, and they are sort of ending in a sense. So we've got this wave 1 up here, this wave 2 to here, and then we're counted 5 waves just for the 3rd wave, which would be up for 1, back for 2, and this wave 1, 2, 3, 4, 5 for the 3rd wave. So I'll just go over that. We've got 1, 2, 3, 4, and 5 for wave 3 here. So we'll have wave 4 coming back, retesting 12.2. Normally pulls back to the 3rd, 4th wave of 1 lesser degree here, and then a 5th wave up here to the 12.272 area here, the little group 2 area here. But as you can see, we're very close to the 12.3 there, so a move above that would help us, would eliminate the bearish count, and then we know we've got a bullish count in play. But what I was sort of thinking is that we probably wouldn't get to that point here, this 12.3 here. So it would, this 4th and 5th wave would sort of haunt us here at the 272 mark, and then have an ABC correction back down here towards the 12.150, which is in green. I left it in green because it's our balance line through the larger correction. What I mean by that is this here. So in amongst all of this corrective supply here, the 12.150 is pretty much the balance point through all of that. So that will become, it would have been important here, And it's not so much important just here, but later on in all of this and through here, it will become very important. So we'll just leave it there for the time being. And later on, if the market's going to work to this 12,150 in terms of vibrating sort of towards it and into it, then it will become very valuable for to trade longer term trade setups later on. So look, this is sort of what we're looking at here. I may have a count in here wrong. I think I've pretty well nailed it. So we should still have that fourth and fifth there, and then a sell-off into this here. So it will be that ABC correction there. Probably a little bit easier to see on the S&P 500 here. I have counted this as an A and a B wave to here and a C wave down to here, simply because of the strength that it's shown over the days there, but we'll need to check on the volume in this trend as well to see what's there, because the volume on the ASX has been pretty low really, and the banks I noticed on Friday had sort of opened high and closed low on high volume, so it's definitely a reversal bar there as well. So without sort of splitting hairs too much here, I was sort of looking same sort of 5-wave structure up through here, but in here we've got the 1, the 2, the 3 to here, the 4 to here, and the 5 to here. But like I said, I may be wrong within here. We may just get this A, B, C correction here, 3-wave swing, zigzag, a 5, 3, 5 structure to make wave 2 here. So we just need to see how this pans out through here. If we get this A, B, C correction through here and it comes down below the 1300, then it gets back up on the 1300 there, then that would be our setup for the long trade upwards. And if we're correct, if this is a wave 1 coming up here, yeah, like a wave 1 here and a wave 2 coming back here, then this would be a wave 3 moving further up through here. So if it found support on here, we could have a nice long run through there, and that would lead us to on our local market, the XJO, it would leave us at the 4,800 mark, which currently we're struggling at the moment. If I just jump to that while I'm talking about that, because it's our important market as well. So that's the 4,800 here, and once again we're also looking for 5 waves coming up here. That's what we're doing during the week, and through here we're looking at 1, 2 and 3. I still think there's a 4 and a 5 to go here. This is on the ASX 200, not the SPY. But what I was sort of thinking is that one way or another we'll get 5 waves to around the 4,800 here, have a correction at this point here, some sort of ABC correction back down, somewhere following the S&P 500 and the Dow. And once we got that, we can clarify it as a 3-wave structure, which would be a bullish corrective pattern, an A, B, and C, 3 waves like that, then we can look to trade long up through there. So we're going to need a bit of patience to allow this to, first of all, complete here, because we don't really want to go long just, even if that moves up, we don't want to go long just there, because we know that the 4-8 will react. And we need to see what sort of pattern occurs either at this level or drop down, because corrections will be either sideways or they will be in time and price coming back. So we just need to allow that to play out. We need to work out if it is a corrective pattern, and if it is a corrective pattern, then we'll start looking at some stronger, longer, larger position sizing trades for the long side, because support eventually on 4.8 would get us at 5,000 this time around. And remembering that the 208 bear market, the 61.8 retracement level for that would be around the 5,400, but the 5,300 would be the top of minor group 1, and that's what we'd be looking at once we've got support and dealt with rather handle the corrective pattern at the 5,000 mark. So anyway, some possible good opportunities on the long side. We're just not ready for them yet, and we need for the market to unfold in that particular way so we can get our timing right for that. But we still got the bear market scenario haunting our structure, so we need to eliminate that first, and it's just going to take time. Everything in life seems to take twice as long than we would like, but that's the way the cookie crumbles. The FTSE, we sort of recognise the corrective pattern here from 5.8 here, and the push up through here. So I'm thinking that that this correction that we're looking at here at 5.9 is actually a wave 4, and that would line up with the Dow, the S&P, and our local market and so forth, and even the euro and some of the other commodities as well, which we'll get to next. The SPY here, always a bit of a sort of hairy dog here, but lower volume sort of thing. But look, you know that for traders that know the levels, that the 4772 would kick in and give us a bit of grief, but not so much grief, because once you understand it, it's a great trading tool. So look, that would be if this found support on the 4772 there, a nice support. Not just trading above it like this, it's got to come back and check it, and it just hasn't checked it and moved off again, the same as here. So if it does do it this time, if and when and whatever, if it does, then trade it, and you should be able to get close to the 4,800 here, but always good to bail out a little bit first, or leave 25% of your positions in there to trade blue skies if that's the go. Okay, futures markets, like copper. So we were looking at this early in the week here, of finding support on this group 1 here, because markets trade quite quickly once they've got support, especially on these sorts of levels to the next number 5. What we noticed here is that a series of waves 1s and 2s here. So just sort of going back over this, from this point here, we got up for wave 1, back for 2, up for 3, back for 4, and up for 5 to there. So then this wave here would be up for 1, back for 2, up for 3, back for 4, and up for 5 to here. So I'm wondering, we've got this sort of ABC correction here. So obviously that this last little guy in here must be part of the sequence as well. So up for 1, back for 2, up for 1, back for 2, up for 1, back for 2. So a series of 1s and 2s there, and here we're seeing a series of 4s and 5s here, and we understood that when we got here. So look, as long as this 440 holds here, then we're looking for a little 5th wave up through here, and that would also line up with stocks as well. But it is a little bit sort of dodgy through here. But the reason that I think that it would move up from here is simply this. No, that is 5 waves here, isn't it? That 1, 2, 3, 4, and 5. So look, we may be coming down further on this one, and that may be the top in place here. So it's the same with the S&P 500, just don't know. But while it's traveling sideways here, it's a corrective pattern sideways, and it should push up. But just zooming in on that situation, unless that's part of a C wave, which is the A, the B, and the C wave here. That's probably why I've labelled it like that. So look, anyway, that's the trading range. Look for the breakout, and the center of that would become very important here. So from the 442.5 here, the 442.50 would be the line that you'd want support on to go to the upside on that. Crude's much the same as well. It's got this sort of pattern here as well. So still looking for a little wave 5 here as well, the same as on the Dow, the indices, and copper. Same situation there, and also the same for gold as well. But gold's pattern is slightly different, but also corrective as well. We were looking for an A and a B and a C wave. These two have played out quite nicely here. We just need to work out if we've got this C wave working down through here yet. This looks like a wave 3 down here. The wave 4 pulling back up, really can't pull back up past this move here, because then it'll be overlapping wave structures. So even though in shorter terms we'll be looking for a wave C to come down a little bit further, If that's not the case, then what we need to do in terms of actually trading the market is look for support on top of group 1 here, the level 3 here, so sub-level 3. So if support develops nicely on here, then look to trade long up at that point there. So a nice little spike up there, coming back, retesting it, and then looking to get into it from that point there. But it does look like a third wave here, so we'd expect a move back down through here. But this wave 4 here is looking sort of rather big for what's actually happening in terms of this wave from B to C here. So if support is found here, then look to trade long, and you could do that by scaling in on 431, 432 and 433, especially if 433 becomes support, because that's a smaller group 1 and you can move in from that point there. But yes, well, silver's made new highs, so we expect gold to follow. And if the US dollar index moves back under the 76, then that would help as well. So looking at the US dollar index here, because we can have a quick look at currencies. Bear with me here. Okay, the US dollar index here, 76 is the line in the sand. So while it's above the 76 here, the euro would be doing the inverse here, but and the same with gold as well. So we can see this pattern here as a 3-wave pattern here. So if this is, once this completes, then if it moves back down through here, then that will help gold push up, and it will also help the euro push up as well if the US dollar index is coming down. If this is an ABC correction here for people looking at it, then you can see that that's the strong wave there, so that's likely the third wave in the structure. So this would be something like an A and a B and a C wave moving up here. The C wave is always in 5 waves, so we'd be looking for up for 1, back for 2. Then there would also be up for 1, back for 2, up for 3, 4 and 5. So breaking this down a little bit further here, as you can see that there's a series of 1s and 2s in here. So even though we have up for 1 and back for 2 here, we've also got up for 1, back for 2, up for 1 and back for 2. So this is, and then up for the third wave here. So this is really the center of the situation in here. This is the middle of the whole structure. So there would still be 4, 5, 4, 5 to unfold through here. So the 76, 72 would be a likely sort of target, this group 2 here, for that to fade out at that particular point there. So yeah, a bit more to move through here. So if you're going to trade long from this point here, then would want to see support on the 76.50 here, the sub level there. And also the 50 would probably cut in through here, so that would obviously pull back to the 50, the 76.50. Oh, that is the 76.50 here. Sorry, the 30 in here, looking for 30 there. But this C wave is not quite complete, just like the euro wouldn't be complete on the downside as well. So in the inverse to that, the euro here would be up for wave 3 here, looking for an A and a B and a C wave to unfold in here. Now the C wave, as mentioned, always has 5 waves in it. So it would be looking down for wave 1 here, wave 2 here. That wave 1 could be over there, by the way, but no matter, 1, 2, and the third wave impulsing down. So it is true that we could have 1, 2, 3, 4, 5 down for the low already, but I don't think that's the case. I think it's still unfolding. So this would be the strong third wave. This would be down for 1, back for 2, down for 1 of one smaller degree, even though it's a bigger structure, back for 2 and down for 3, back for 4, down for 5, back for 4 and down for 5. So I think we can still be coming down. Here we go, sort of lower in this area here while the US dollar index pushes up. Now, if it's good to have the Elliott count, but if that's not right, then if this market here finds support on the 141 here, and it's a good support, then you want to be long from that point. Yeah. In the meantime, you trade all the little sub levels through here, and if it does end up moving down through here, and it would be very bumpy through this little, from the 40 here, the 140, the group 1 here, the 10, the 20, and the 30 will be really rough there. So don't get involved in that. Allow it to play out here, then look for support back up there. So on the 5-minute chart here, just looking at that structure again here, we've got little 5 waves here, down for wave 1 and back for wave 2. Yeah, to there. Then we've got this move down here, which I don't think's a wave 3 in terms of 1, 2, 3, 4, 5. I don't think that's the case, because this wave 4 here pulls back up into the price territory of wave 1 here. So we've got little 1, 2, 3, 4, 5 here for the 1, the 2, the 3, and the 4 here, the A, B, C for the 4th. So that's just retesting the 141 there, and it may retest it, that's fine. But it should fail at that point and move back down here for a series of 4s and 5s. Like I said, if it finds support on the 141 there, then you want to be scaling in through these levels here, building up a longer term trade to make new highs back up here. The Australian dollar, excuse me. Okay, the Australian dollar. Essentially, we're long from 98. We're expecting a sort of a big move to the upside, and we're still looking at that, continuing to move to the upside. But from here, I know it's a little bit sort of messy, but basically 5 waves. We're looking for the 1 here, the 2 here. We've got the 3 up here, the 4 here, and we're looking for the 5th wave to move up to here, which would bring us into the 103. The 103 is the important one here because it's group 1. So group 1 is always 1, 2, and 3. The idea is to scale in through group 1 here, and depending on your trading time frame, because this is a major level here at $1, and the first minor level would be at $1.10, then $1.20, and $1.30, and $1.50 would be the medium level. So this 1 here, and 2 here, and 3 here, they're sub-levels, yeah? And then these next levels lower than that, they're micro levels, okay? So it's just same thing, just breaking things down a bit. So still, it's all group 1 here. So normally if you're trading from, the $1 to going up through here, you would normally take profit at this level here because it's group 1. Now at group 1 here, what normally happens is it will come up and have a reaction here and then make the first high above the level, and then it will have its correction. Now the correction that it has will be correcting the 5 waves up from the 98 here, okay? So that would be correcting all of this structure coming up through here. So we'll be looking at an ABC correction across the 103 level, the top of group 1. So once we've got that bigger A, B, and C across here, and then it refines support after the ABC correction, then we can trade it long to 105. That's why it's good to get out at this level here, or at least take a decent percentage of the profits here, and then wait for support. So the correction we're looking at 103 here would be, in terms of proportion and ratio, needs to correct that move up from 98. So it should be a reasonable size sort of correction. And we're also counting that 5-wave structure in there. So you can see that from this wave 4 here, you can look on our charts to sort of nail it down a bit further, but this wave 4 here to wave 5 moving up to the first high above the level here is normally the 5th of the 5th. So that's what we'd be looking at there. But you can see the strongest move in this market here, this section, is this wave here. So that's the wave 3 there. So this would be from this point here would be wave 1, wave 2, wave 3, wave 4, wave 5. So there's 5 waves in there, all right? But coming back into this point here, there would be wave 1, an A, and a B, and a C, an expanded flat. And then we've got wave 3, which takes us all the way up to here. So now we're getting wave 4 here. This would be wave top of wave 3. So we're going to get a wave 4 in this section here, yeah, and then we're going to get another 5 waves up to make wave 5, giving us the first high above the level there. So that's what we'll be looking at there. So expect wave 4 here to be complicated, maybe a triangle pattern, at least 3 swings, and this is just one swing. This would be 2, this would be 3 here. That would be simple, but it could be 4 and 5 before it pushes up through there. So just be a bit careful in there. And the 272 here is going to kick in and hold a bit of strength here. So group 2 here and the midpoint will become quite valuable for you once you give this enough time to unfold through this area here, and once it's completed, then it should push to the upside. The Australian dollar is following the S&P 500, so bear that in mind as well. So you know the count on the S&P 500. So this is following that quite closely on the daily chart, so 4-hour chart, so you can sort of have a look at that, where the euro is not following the S&P 500, and it normally does. So the S&P 500 at the moment is pushing up, while the euro here is having its ABC correction. So the S&P 500 was pushing up while the euro was coming down. So the euro and the S&P 500 will pull together in due course. One will follow the other. So just bring that into your equation as well, and I'll be giving it some thought over the weekend and early in the week as well. So, alrighty, bit of a mouthful, all of that, but there we go. So just to sort of recap that on the S&P 500 and the Dow, we think that there may be another little push up through there. We know the limits on the Dow Jones at say 12,300, but further down at 12,830 would eliminate the bearish count that we have, and that would be great if that could just push up there and knock that bearish count out. Then we have our A, B, and C correction, because then we can be focused on the long side of the market once this A, B, C correction for wave 2 is finished, because we'll be pushing up for a wave 3, and that would be very exciting. So it doesn't really matter for us which side we trade. We're just looking for the trend, and that's what we need to do. We just need to be we've been patient while this has been going on. I know it's frustrating, but it's just the way of the markets. You know, 2/3 of the time a market is in a correction, and then it runs for a third. So we just got to be a bit mature about this and wait for the right setup and get our timing right. Alrighty, well, good morning and good luck. Enjoy the weekend.